In the next few minutes, we are going to walk you through the process of production of liquid fertilizer and its launch to the market. We are going to explain you the purpose of the product. We'll talk briefly about the market. We'll tell you about the costing and the estimate budget for a period of 5 years. The team that is going to walk you through these steps are Ivo, Teddy, Yavor, and myself, Rositsa.
What is a liquid fertilizer? It's an non-organic liquid which promises healthier and safer crops. No matter if you're a small gardener or just trying to run a big sun house, no matter if you produce vegetables or flowers, you could use a fertilizer, and that's what we are trying to do. The product we are offering is called Final Phase. It is recommended for use in the last week of the flowering phase of the plants. It promises healthier, safer crops with great taste and nice aroma. Before starting our business, we decided to hire a marketing agency which conducted a thorough research for us. It estimated the annual market of liquid fertilizers in Europe and on approximately 32 million euro or 64 million Bulgarian level. Our agency also found an average price of liter of liquid fertilizer, and it's 4 euro or 8 Bulgarian level. Therefore, we have 8 million liters of ready product which are sold annually all over Europe, and this is our target market. We get the advice to target 2% of market share, which is 160,000 liters of liquid fertilizer. The most popular product on this market are the 5 liters bottle. They are easy to carry around and they don't take much space to store. And that's the product we decided to use in order to penetrate the liquid fertilizers market. We get our desired sales target, which is 32,000 units of annual sales.
In order to cover our production needs of approximately 32,000 units for the first year, we need to buy some machinery. We need a mixer, which is estimated to approximately 100,000 level, based on our research. We need a pump, which is estimated to about 10,000 level. We need also a forklift, 12,000 level. And we need to spend additionally 14,700 level to set up our production facility. Painting, cleaning, giving some rent in advance. We need additionally 35,000 level of working capital in order to cover our expenses in the first several months before we actually start receiving some cash. That total 171,700 level, which is our initial investment in order to start up our business.
The mixing process of the liquid fertilizers includes 4 steps: picking of raw materials, mixing, pouring, and packaging. There are two kinds of operations: manual and automatically. First step is the picking of raw materials. The team member who pick the raw materials go to the store with the raw materials, with the formulations, and take the raw materials. Next step is the mixing of raw material, the mixing process. Mixing process starts in the mixing area. The forklift take the batch and bring to the area. The mixer takes the raw materials and again work on the formula and put in the tanks the materials by order. It comes the third part of the process, bottling. The bottling is start for the prepare bottles with the labels and start pouring on the specific table. On this table there are pumps, filters and scale. The last step of production is packaging. The team members put the bottles in prepared boxes with the name of the product, with the batch, number of the batch, and closed with scotch. For us, it's very important to provide our clients with a good product and in good condition.
So after you've seen the process of creating the final phase liquid fertilizer, let's talk a little bit about the cost of production. Since we're creating a homogeneous product on continuous basis, we're going to use process costing to accumulate, track, and assign costs to products. In order to create the final phase liquid fertilizer, we're going to need raw materials such as magnesium, chelate magnesium, sulfur, and RO water. For the packaging, we are going to need a 5-liter bottle, a special cap for sealing, and a label. Based on the production formula, we have estimated that the cost of the raw materials for a 5-liter bottled product will come down to approximately 10.4 leva. In order to meet our desired average daily production and has direct labor needs, we have estimated that we need to hire 1 worker on a full 8-hour working day and 1 worker on 4 hours. The cost that could be directly attributed to the time the worker spent on each product comes down to approximately 0.42 leva. In terms of overhead, we have estimated that we'll need to spend 7,137 leva of fixed cost per month. Basically, those are accounting for rent, maintenance materials, maintenance personnel, the salary for the production manager, security, insurance, and machine depreciation. We're estimating that we'll need to spend approximately 0.91 leva per unit as a variable overhead. Those are mainly accounting for covering the expenses for electricity needed for the machines and fuel for the forklift. Now, taking all these costs, our estimated cost per unit is approximately 14 leva, accounting for a 5-year monthly production of 30,030 units per month.
As we already discussed, our plant sales for year 1 are 32,000 bottles. We anticipate yearly increase in our sales year over year to be 5%. Our selling price, we are going to set it at the level of 30 leva per bottle. This price is a little bit lower than the average price for the same product on the European market. The reason for this is that we are new entrant to the market. Based on this sales volumes and price, we anticipate 960,000 leva sales volume.
To achieve our production and sales goals during the first year of our operations, we need to purchase raw materials for the mixture, bottles, caps and other materials for the packaging of the product. These total to 335,691 leva. The payment schedule we negotiated with our vendors of raw materials is 75% of our purchases during 1 month are payable in the current month and 25% are payable in the next month. Similarly, a schedule for accounts receivable is estimated to 70% of our sales to be collected from clients in the current month and 30% to be collected in the next month. Other expenses associated with our production are 22,800 leva for salaries to for our employees. Also, sales and administrative expenses are estimated to 274,000 level for year 1. The cost of goods sold during year 1 totals to 467,096 level. Taking into account all expenses we would incur during the first year and all sales that we would make, we estimate that we'll finish up year 1 with positive cash balance of 237,449 level, or net income in the amount of 197,014 level. If we manage to achieve our planned 5% sales increase year over year, at the end of year 5, we project to reach total sales volume of 38,896 bottles, which is estimated to 1,166,886 level of sales. We expect net income for year 5 to be 287,351 level.
So, what is the outcome? With approximately 170,000 level of initial investment and over 200,000 level in our cash accounts at the end of the first year, the payback period is less than a year. The internal rate of return is rocket high, 134%. And we project that at the end of the 5th year, we are going to have over $1 million in our cash accounts. So is it worth it? Definitely yes, at least on paper. But how close is this to the reality?
What is liquid fertilizer? It's non-organic liquid which helps plants
Our plant
Bla bla bla. Малко кусат светло.
the increase the name.
Я не могу.
2,000 bottles.
Teddy, if you need to describe this project with one word, what it is?
challenging.
Let me think now. Excel.
Fun.